Alright guys, and it's Thursday, very close to the end of another week. What an interesting week, right? We did have CPI from US, much lower than expected. Really impressive. I've covered this topic already on the previous video, so if you haven't had the opportunity yet, go subscribe to our channel, have a look on the videos we have. It's always good content, quality videos, and as you there, give us a thumbs up, and then share the content with your friends. All right, so today what I want to talk again is still from US. I want to grab the numbers here so I don't do any mistake. So on Sydney time today we had midnight 30, so 12:30 a.m. The core retail sales as well the retail sales and the PPI. So the PPI is the price producer index. So basically how much the inflation is affecting the producer. So we have the CPI, we have the consumer price index, that is the inflation that affects the consumer. So me, you, your family, your friends, and so on. But if you have a business and you are, building things, you are on the construction sites, you are, any other types of business, you do get inflation on the products you buy, the materials you buy to make the goods. So the PPI is the measure that measures the inflation. It's the data that measures the inflation for the producer. All right, so this is why it's called a producer price index. Funny enough, of course, we did have an increase of 0.5% month over month. The consensus was expected to be positive 0.1% and the previous was at 0.4%. So interesting enough, PPI has a very big correlation with the CPI. Same as CPI have a big correlation with the PPI. Why is that? Because, well, if you are producing goods and you want to sell those goods, you don't want to pay the inflation. You have to calculate the inflation on top of the price of your product. So this will be rebated for the client, right? So the consumer price index, there is the PPI attached, let's say, into the data. So that means that the CPI and the PPI came lower. So inflation, it is actually reducing on US economy, so USA. Second, but not least important, we had the retail sales. Well, retail sales was expected to be at negative 0.3. It's still in the negative area, but it comes 0.2 less than expected. So it came 0.1, negative 0.1. This is, becoming positive. So it is kind of switching to a positive instance, but we are on the negative, as I've just mentioned, we are still on the negative. But it's kind of understandable, all of these data coming in yesterday and today, because inflation came down, people, the PPI came down as well, the inflation for consumers came down, as producers came down as well. That means that the prices for the goods and services were lower as well. That means that the retail sales, of course, the retail sold more on last month. So there you go. We can see that US is kind of going into the right path. Again, we do have those data, but I need a little bit more data to see how we're going to proceed now towards the end of this quarter. To be honest, I was reading a few researches from MUFG this morning, and they do believe that the US dollar is losing its strength, same as a few other banks, but they stated that we continue to believe now that the US dollar dip could extend. Not on those perfect words, but the sentence and the meaning behind it, it's the same. All right, guys, so this is all from me today, so you know how the US economy is going now. And please subscribe to our channel, give us a thumbs up on this video, share this video with your friend that, maybe is a trader or wants to start to know a little bit more about macroeconomics. And remember, next Tuesday, my webinar 6 to 7, we're going to have a very nice class on how to do your own commitments of traders and how to source this data into your Excel. All right, guys, so that's all, and I see you in the next video.